give several different opinions in the audit. Most of them are on the individual funds, and then the funds as they are all grouped together. So this audit will tell you that we have a clean opinion on all of the funds except for the ones on pages 5 and 6. And that's only because, for at least 2018 anyway, we're not including the figures from the housing development, right, Misty?
Correct.
So that's,
They're not ready yet, so we decided not to wait and be late on our audit. And we won't have this problem again next year.
that's what I was going to touch on too. So yes, what Misty was saying is right, in that this is purely a judgment call on the part of the city to just not wait until September-ish, I think is usually when they're ready, and the city just doesn't want to hold their audit that long.
Didn't we have the same discussion last year?
Correct.
Yes.
So going forward then for 2019,
The
since,
year before.
yes, since there's since been a resolution in 2019, this language will go away in 2019. So it'll just be a little bit shorter report. But
And that's because the Hot Springs Fall River Housing Commission joined the Fall River Housing Commission.
Right.
And so they're under the county, they'll be in the county's audit.
Exactly.
not ours.
Exactly. So all of the other funds that we looked at and all of the funds individually reflect a clean audit opinion, which is what we want. I'm going to jump around on you a little bit, like I mentioned, so feel free to stop me, but there is a method to my madness here. I'm going to take you through the funds first. So let's start on page 7. What you're looking at here is just an individual balance sheet, and then on page 10, the starting of what would be the income statement for all of our governmental funds individually, our general fund, liquor, lodging, and dining, additional sales tax, so on and so forth. This is all of our funds that aren't providing the charges for services. So this is everybody but water, sewer, garbage, golf course, and college. Big picture, the general fund, and correct me if I'm wrong, Misty, the general fund ran pretty business as usual between 2017 and 2018. If you look from on the commercial side of things, we call it a net income, if you will, a net income or a net loss. Flip over to page 12, and I'll point that out to you for the general fund. The third line up from the bottom on page 12 in the general fund, it's called net change in fund balance. This would be our net income or net loss for the funds. This year for the general fund, it looks like we've got a bit of a loss there. Now that's primarily driven by, if you look at a couple lines above, to transfers out. That's primarily driven by the monies that we transferred out of the general fund to go into additional sales tax for that future road project. So that's what's driving that loss, if you will, in that fund. Liquor, lodging, and dining was very business as usual, very comparable. The additional sales tax fund, you see then, its net income, if you will, is much higher. It obviously has all of the income that the general fund didn't have from that transfer. So that $420,000 is coming into that fund, thus making it look more profitable, if you will, than normal. The other funds, business improvement, the capital improvement fund, and the cemetery fund were all very comparable, no real outlying odd activity between the years. So what I'll point out to you then, if you can jump back to page 7. Sorry, this can flow a little bit more in order, but okay, on page 7 toward the bottom in our fund balance area, I always like to point this out to kind of give a breakdown of, this would be in the commercial side of things, our equity. This would be a breakdown for each fund of the monies that are there. What are the restrictions on those monies, or we call them commitments or assignments in our governmental funds. you can see, if you go in the additional sales tax fund, a couple lines up from the bottom, you see that 420,000. That's that new commitment that the city established for that future road project. So that's where you can see that the monies have been set aside formally and are sitting there waiting for your future use. That's really high level, just the governmental funds. Do any of you want to talk in any more detail on these several different funds we talked about? In any more detail or questions on any of the numbers?
Maybe explain how you test the numbers just a little bit.
Yes, absolutely. From an area of emphasis, we spend a lot of time on what we do is we tie out the figures in the balance sheet. So anything that's an asset, our cash, our capital assets, investments, anything like that, we tie all of that out to some sort of supporting documentation, the debt balances. So we tie out the balance sheet. Then on the revenue and expense side of things, we look at variances, fluctuations between the years, what caused those, what do we expect the balances to be compared to what they are. We do a lot of testing of the expenditures in the different funds. And we also come up with expectations for revenue. We know what you charge for your services, so we come up with a ballpark, this is what we think revenue should be, and how does that pan out in comparison to our expectation.
And you know that because they look at the resolutions you pass throughout the year, setting rates and fees.
Correct.
Any changes that you make, they review council minutes, claims.
Correct. We also pick a handful of different transactions on the enterprise side, water, sewer, garbage, also on the governmental side, any large or unusual license and permits or something along those lines. And we walk through those revenue transactions to say what should have been charged in this transaction compared to, yes, the approved rates and the resolutions. Was that what was actually charged? Are there any differences there? And is that what was deposited in the bank? So we carry it all the way through like that. Okay, if there are no other governmental fund questions, what I'd like to do is switch over to the enterprise side of things and take you to, let's go to page 19. What we're looking at here is essentially the profit and loss, if you will, for our enterprise funds. So all of our funds that are charging a fee for some sort of service. Our water, sewer, garbage, golf course, and Evans Plunge funds. If you look at the third line from the bottom, the change in net position, that's going to be either your net income or your net loss for the year for those funds. So if we look at the water fund to begin with, the top number there in the water fund is our revenue. It's down a little bit from 2017, but we also noticed there was less usage in 18. So we've got a slightly smaller revenue number there. We did not have any rate changes, correct me if I'm wrong, Christie, in water, sewer, or garbage, no rate changes. So big picture, in the water fund, we had less usage, so we had a little less revenue coming in, thus creating, a smaller net position figure, or in this case, a bit of a loss. Is there anything in the water fund that I'm missing? And no significant expense activity comes to mind
They have a few projects.
that would have stayed on the expense side?
Yep.
Okay.
Under the capitalization threshold and such.
Yes.
And we also had a recommendation from an advisor that came in and said that we needed to raise our water rates were too low in comparison to other communities. So for us to qualify for future grants and funding, then we needed to do a relook at that, and we have done that during the year. So
They were effective though January 1, 2019.
yeah, so
that
it won't be
next.
next year.
When did we buy the zipper?
That was last year.
That was in
Yes.
2018.
18,
Yep.
so
And they paid a portion of that.
water and sewer paid portion of the city.
But that would affect our cash balance, but that's not sitting here in expenses, because like Misty mentioned, it's a high enough dollar figure that we capitalize it, we put it on the depreciation schedule as an asset, so it's actually not in these expense numbers. But the depreciation on it, over its useful life, that would be reflected in our depreciation number. The other thing that causes fluctuations in these enterprise funds, and it's completely out of the hands of the city, is the city has a portion of the South Dakota Retirement System pension plan. There's all this accounting that we have to go through to record every year based on the audit of the plan itself, the city's share of everything. So the city's share of an asset or a liability and any corresponding revenue or expense that might come with that. And so the other thing that's making some of these expenses look a little bit higher in 2018 is purely due to the share of the pension activity. From 2016 to 2017, there was quite a swing in the city's share of the pension plan, which caused a lower expense amount or a revenue, if you will. From 2017 to 2018, the plan was really static. And so there's more of a normal expense number there. Rather than 2017, I think we would have seen lower than normal expenses. And that's something that's just completely driven by however the plan performs. In the sewer fund, we had very comparable revenue in that fund. And it's up, or it's down, I'm sorry, it's down from 2017. I think we had some slightly higher expenses there. I didn't have anything in my notes that came to mind unless it was just several smaller things that didn't necessarily hit a variance of ours. And then in the solid waste fund, we have higher income in that fund in 2018 because you had done some brush pile chipping in 2017 and you didn't do that in 18. So you had lower expenses there, a higher income.
Maybe repair, we're doing it in 19,
Okay.
so you're gonna have a big variance next year.
Then if you switch over to the next page there, it'll continue with the golf course fund. The income was pretty comparable in the golf course. We didn't note any rate changes or any significant rate changes, I should say. And there was no significant expense activity that stuck out in that fund at all.
Well, that was the one where we had worked together mid-year to capitalize the irrigation project and then didn't get it added to the capital assets at the end, so we had that very large adjustment.
Okay.
Late entry.
Okay.
So they did have over $100,000 in expenses for the irrigation.
Yeah. We'll probably next year be lower in the revenue because of the late start this year.
Sure.
Well, you never know, summer could go real long.
Yeah.
Evolving in November.
That's true, too.
And then moving on to Evans Plunge, again, we didn't see any rate changes there. The revenue is very comparable. If you look down at the third line from the bottom, you know, the net income, 2017's report would show you that the net income in that fund was over $300,000. That was driven by an insurance claim in 2017 that was $200,000. So that's why if you were to do a year-over-year comparison, this fund would look so much lower. It was just very grossed up in 17 insurance.
It was like 225.
Yes, for the roof. Okay. Now, if you go to page 21, the next page. I'm not going to spend a lot of time on this schedule, but I wanted to at least give you an explanation of what this was. This is just a cash flow report for all of our enterprise funds. So this is where it's showing you cash coming in the door and cash going out the door. If you wanted to see just an actual cash report. And then our total at the bottom gets us to what is the cash in the fund at the end of the year for our enterprise funds. Okay. Okay, with regard to the enterprise funds, do you want to talk in any more detail? Was there anything I glossed over, didn't touch on?
Can you explain why we have governmental funds with enterprise funds and the difference in accounting between the two?
Yes,
Why it
and
sounds
that's-
different, and you say if you will, because it.
Well, and that's my next, I'm glad you brought that up, because that's my next thing. So one of the many intricacies of our governmental accounting is that those governmental funds that we talked about earlier, our general fund, funds like that, that aren't charging a fee for service for things, those are maintained on the modified accrual basis of accounting. So the name of the game is, did I get my revenue within a certain amount of time after year end? If I did, I can count it as revenue. If I didn't, I can't. And the interesting thing about those governmental funds is that they don't keep assets on the books and they don't keep debt on the books. The assets and the debt are maintained in their own separate funds. So we've got these funds here that we've talked about, and then we've also got long-term debt and capital assets because they're not maintained actually in the general fund. The general fund doesn't have its own assets and its own debt, for example. But these enterprise funds, water, sewer, garbage, etc., these are a more normal basis of accounting that all of you would be familiar with in your day-to-day likely, where it's just the full accrual basis of accounting. You have your receivables and your payables. If you've earned them, you keep your assets on the books for and your depreciation and your long-term debt, and they're all housed in those funds. So what we're doing then is we're taking all of these funds that are on two different bases of accounting and doing a reconciliation process to get to two statements in front. And that's why we have to do that reconciliation process is the water fund accounts for things differently than the general fund does. There's this reconciliation process to get them on the same full accrual basis of accounting. Okay, so those summarized schedules then, where everything is put together, I'm going to take you back in front, or closer to the front, and go to page 5. This would be, it's our statement of net positions, and this would be our summarized balance sheet of all of our governmental activities. In one column, our business type, our water, sewer, garbage. In another column, all now on the same basis of accounting after having gone through this reconciliation process where we've audited the capital assets that we're depreciating and we're auditing the long-term debt, and we've got all of them reconciled together now. So this would be your condensed version, but it doesn't tie exactly to the totals on those back pages that we already talked about because we're dealing in two different bases of accounting. This one is different than the fund statements we looked at. And that's why they don't match if you were to try to tie up the totals. If you go to page 6, this statement that looks like it's in a very strange format, this is our condensed version of our profit and loss, called our statement of activities. So this statement, kind of like the other statements, the third line from the bottom gives you your change in net position, your net income or your net loss. This is the net income, if you will, in the combined version, just like what we saw with the balance sheet. Now, similar to what we talked about, if you see the total in the governmental activities column of the $185,000, if you were to compare 2017 and 2018 again, that's going to look a lot lower in 2018 because 2017 had a significant amount of federal grant revenue for the AIP project that we did in 17, as well as the Boulder Falls special assessment. So keep in mind those drastically different changes in activity if you were to be looking at the 2 years side by side. Nonetheless, though, this is a positive increase. It's a positive number, thus increasing the overall net position or the equity of the city at the end of the day. The other thing that's different from 2017 is that we came in 2017 and did an additional audit. Anytime you spend more than $750,000 of federal monies, you have to have this additional audit done to audit specifically those programs that had all those expenditures. And we did that in 17, called a uniform guidance audit. So we did not have to do that in 18, Christie's very relieved. The federal expenditures just weren't high enough to warrant one of those, so.
We'll probably have it whenever we do the bridge. I don't think that ends up happening this year or 2020, the older that, yeah.
The federal funding can come in a combination of either maybe a grant or a lot of times debt can be considered federal funding, and so that can be enough to kick you over that threshold also. It doesn't always have to be in the form of a grant within a syndication.
Who identifies that threshold?
Good question. Sometimes the monies come directly from the federal government. A lot of times they're passed through from a federal government agency to a state agency, and the state will pay the city. So there are requirements there that they're always supposed to inform you of certain criteria. Here's the name of the activity and what's called a CFDA number. And that number identifies it as federal money. And that tells you if you were to look it up what federal program it is. And thus what would be the rules of the documentation you would need to keep and stuff like that. But it's that CFDA number. Now we have found that cities don't always get notified with that kind of information like we should, so a lot of times Misty and I will keep in touch. Yes, we'll keep in touch. She'll contact her people at whatever agency she's dealing with and have them do a little more homework, and we're able to figure that out.
And I keep an Excel spreadsheet and add it up through the year and share that with them when I do all my big little paperwork.
Good question. It's supposed to be always provided. We just don't always find that that's the case. It should be fairly black and white, and it's not always. Not always. Okay, what else before we just touch on some of the note disclosures? Anything with the statements or the numbers or how I've gotten
Just a couple of questions. How did the sales taxes, property taxes, liquor lodging taxes compare to 17 and 18?
I want to say they were really comparable. So hold on just a second.
Because they do a variance report and we talk about all the details between the differences. And
I'm sure at some point Misty's thinking, I can't possibly be met with a variance. You need to ask me about that. But what we do, that's a good question on the property taxes, though, is we get figures from the county, and we go through that same process of what should the property tax activity be, and compare it to what it is, talk with her about any differences we might find. Do the same thing on the sales tax. Get the sales tax returns, come up with what the totals should be, and compare them to what's recorded. Okay. Okay, so if you're on page 10, hopefully, Mayor, I'm going the right direction on your question here. Page 10 in the general fund. You see the property tax number, the first one there, $1,071,000. In 2018, that was $1,023,000. In 2017, that was $1,023,000.
The increase would be the increase in our levy when we take the CPI growth.
The sales tax number right below it, obviously, is $992 for 2018. It was $970 in 2017.
And I think those are, important figures for us as a council to use as a measurement for how healthy our community is. And obviously, we need to do everything we can to assist in those growing.
And 17 on general property taxes, what, 120?
$1,023,000.
Thank you.
Did you want to talk about them for the other funds? The other funds?
Just the only other one that I'm interested in is the liquor, lodging, and dining, since that indicates the health of our tourism industry.
So that number, he's in the liquor, lodging, and dining fund, the second figure down, the $170,000. That was 156 in 2017.
So that one I understand.
Good question. What else? Anything else?
Nothing else, thank you.
What I'll do now is talk you through some of the note disclosures to give you, these will start on page 23. What these are doing for these first couple of pages is talking through that difference in accounting that I was talking about earlier, with some funds being on the modified accrual basis of accounting and some funds being on the full accrual basis of accounting. If you go to page 24, this starts the listing and the description of all of the funds that the city has. So if there are any questions as to the definition of the fund or what the monies could be used for, these descriptions could help assist with that. That carries over to page 25 also because it goes through all of the governmental funds and all of the enterprise funds. We didn't know any new funds or any closures of any funds in 2018, so the funds presented in 17 and the funds presented in 18 are the same. Okay. If you go to page 27, at the bottom, there's a table there. We were talking earlier about certain things that might hit a capitalization threshold, meaning if they're large enough and meet certain criteria, we'll put them on the depreciation schedule as opposed to leaving them in an expense account. So this table at the bottom here would give you just a general idea for our buildings, our improvements, and our machinery and equipment. If it's over $5,000, we're going to put it on the depreciation schedule, and it'll be in those ranges of years that you see off to the right, depending on what we're buying.
There's a chart that helps us determine that too. You don't have to just guess. Sometimes you get a little creative where you put it, but there's a chart that helps us determine a useful life.
And the general rule of thumb, and Missy's right, there is a chart out there that helps us kind of get a good starting point, but as a rule of thumb, it's however long your city is going to use it. So maybe if a chart tells you that the depreciable life of a certain kind of vehicle might be 5 years, but you know historically your city tends to use their vehicles for 7 years or 10 years. Yes. Then you can adjust those lives accordingly. It's all based on what do you historically do in your day-to-day operations. Okay. Now what I'll do is take you to page 32. You note 6 there. This just gives some more detail when I was talking about funds transferring money in or transferring money out throughout the year. This is a summary table of the monies coming in and going out of the various funds and a description below for what they were used for. And then in note 7, this is a summary, and we'll get into a little more detail on it, but this is a summary table of your debt balances with any additional borrowings during the year and then it being decreased by any payments you made during the year to show you from a 2017 to a 2018 debt balance. Here's the activity that went on. It has it broken out by governmental and business type. The business type is our water, sewer, garbage, golf course, and lunch. If you go to page 33, it gives you more of a detailed breakout of here's the balance of each of the individual pieces of debt. Here's which fund is paying for them. Any security or collateral on that debt. This note disclosure would tell you that. And it gives you the balance for each one. A new piece of debt this year within the golf course was just a capital lease for, it's it 40? How many golf carts was it?
40.
I want to say 40.
Sounds right, yeah.
Yes, so there's new debt within the golf course fund this year of that $91,000, and that's the capital lease of those golf carts.
Leases are weird, so I always have to get the auditor's help to determine how they're gonna classify our leases, because we have a lease on the street sweeper, and it's identified differently than the one on the golf cart, so.
And I'm glad you brought that up. Leases are tricky because currently, as the accounting standards are written, there's different criteria that you would go through. Like she was saying, if the street sweeper would have met X and X and X criteria, then we would consider it an asset and corresponding debt. Now, the golf carts did meet that criteria, so they're on as long-term debt, but as it sits right now, if they don't meet that criteria, then you're just expensing your lease payments as you're making them over the life of the street sweeper. There's an accounting standard out there applicable within the next year or so, where it's going to make all of the leases an asset and a debt situation. So just like we did with the golf carts, where we put the asset on and we're depreciating it, and we put the long-term debt on for the amounts of the lease payments you're going to make, that's how all of your leases will be handled going forward. So
These
if,
are leased to.
Yep, and the main difference between those two is the street sweeper has a large cash payment at the end, so it's not really our asset yet, we're kind of just paying fees. We can decide to not and just let it go back, where these are like lease to own, we're paying it off.
yes, and it's all a matter of each agreement varies and what are the terms of the agreement and does it meet the criteria. But going forward, all of our leases will be accounted for like this. So
That takes place this coming year.
within the next two, I think.
Next
I think it's the year, I think it's our 2020 year.
It does sound right.
I'm pretty sure it's 2020. Now, so if the city were, and you're not normally in the course of like leasing a bunch of vehicles or something like that, this standard could have a big effect on you in that kind of situation. You don't usually do that though, but it's just a matter of keeping it in mind for things like the golf carts or a big piece of equipment or an ambulance or, whatever. So it's out there, it's on the horizon. I don't anticipate it being a huge accounting change unless you were to enter into several of these types of transactions.
And the lifespan of the equipment, is that taken into account during this?
Yes, absolutely. Yeah,
Because, I mean, obviously, there's a big difference between street sweeper, which is a heavy piece of equipment, as opposed to a bunch of golf carts.
yes. So these accordingly are on the depreciation schedule for what their estimated useful lives are, and they're depreciated accordingly over that term. And you're right, there's going to be a big difference between those two. If you go over to page 34, this just gives totals over the next 5 years, and then in groups of 5 years, of these are the debt payments we're going to make, they're grouped by type of debt. This is the amount of principal and interest we'll be making over the future years. Okay, now if you can switch over to page 35. Switching gears a little bit, we were talking about long-term debt. Now we're on the asset side of things, our depreciable assets. So this first table here on page 9, this is the summary from 2017 to 2018 of all of our governmental capital assets. So these would be all the assets applicable to all of our governmental funds. Any additions we had, any disposals we had to get from 2017 to 2018. And then correspondingly on the next page, on page 36, this is that same type of table, but it's for our business type activities. This is the assets for water, sewer, garbage, lift, lunch, and golf course. All grouped together.
Unless you have a big reason for it
just like you look to make sure your cash is increasing, not decreasing, you want to see your assets also doing the same, similar. You may sell something like that, but as you look for those increases in one area of the city, other place, you'll see that.
Any questions on debt or assets? Or what any of those figures are, or what the fluctuations are? Okay, I'm going to touch just briefly on what the remaining notes are here. On page 37, we get into note 10. And this is just giving an explanation of the different types of insurance plans that the city carries and what are the terms of those. Note 11 on page 38 is our pension plan activity. This is what I talked about earlier with the city's share. That's the South Dakota retirement system. These are just all the required disclosures to talk about the state's plan, what are the components of the plan, what is the city's share of that plan, and there are several pages of those.
How do you determine our share?
The plan gets audited, and then it has a list of every participant in the plan at the state level, at the county level, the city level, and then some of those entities that don't meet that other criteria but are still considered governmental entities. And then it breaks it out. It just says this is the city of Hot Springs' percentage of that plan. Then we can take all the numbers in there and allocate them accordingly based on that percentage. Okay. Now I'll switch you back to, if you can go back to page 45. This is going to be the area of the audit where we discuss any findings that we came across during the audit process. So we'll take just a couple minutes and talk through these. There's two different levels of findings. There's what's called a material weakness, and that would be the highest one, and then there's the one right below it called significant deficiency. That's why you see these different groups here. That's just based on the level. So the first finding there, the financial statement preparation, for those of you new to this process, this is just a finding that we're required to put in as auditors when the city doesn't draft their own financial statements and their own disclosures. So it's not uncommon at all to have the auditors draft the financial statements for a city because they can't generally find the time and or the budget to have someone in like Misty's position keep up with the disclosures and have the time to draft this in her spare time.
And then they just redo it anyway, is what they told me.
So this is technically a repeat finding, and at the same time, it's very common to see this financial statement preparation finding in here. The second one is for audit adjustments, and this will just fluctuate based on when we're working through all those sections we were talking about, all those different areas we're auditing, those numbers we're tying out. Throughout the course of that, we post some audit adjustments. We work through them with Misty to make sure she agrees and that we're on the right track, and we adjust them accordingly. So this is technically a repeat comment from last year, but I would say that the bullet points here, the things we're adjusting aren't always the same. We may post audit adjustments each year, but they're not necessarily the same thing each year. We did post a handful of them, and we did work through them with Misty, and I gave her the detail of them, and she'll get them posted in her records, and that'll be that.
And we all match.
Yes, and then everyone matches for next year.
You got a bingo.
Huh?
You got a bingo.
Then on page 46, the other thing that we do right around year end is that when you have a significant amount of inventory, which you do in several of your funds, you come as part of the audit process and count that. And then during the audit process, we have some invoices pulled and we test that to say, what is the price of something on the inventory listing? How does that compare to the actual price of the invoice when we pull it? So when we counted Evans Plunge and the water fund, we just had a couple variances there. So when we counted the plunge, we had two instances in the plunge and 2 instances in water, where the amount that we counted during the count didn't agree to what the individuals in those departments had counted and made it their count.
They're small, very small.
They are small. And I have the detail if you wanted to get down into, I don't have it with me, but I can get it if you wanted to know, which items were they and what was the amount of the variance. We could get that if you're all interested in that.
But on a daily basis, that's an obvious acceptable difference for you?
No, they were supposed,
Well, I know.
ideally, there would be no difference. They're
Right,
supposed to count
right.
at the end of the year, and price, I think she's about to talk about, is another area where we found some opportunities to maybe get a little bit better about our end of year reporting. So ideally, 0.
But I mean, means you're dealing with this on a normal basis. Was it acceptable to you for the little difference that?
Yeah, I'd like to have it be 0. I'd like to not have it on.
Well, no, I
We'll
understand.
work towards that, but it's not.
But it's not a
really-
worry to you?
No, it's not at all.
Okay,
It's not
that's what I was.
Yeah.
So then that second bullet point is getting into what Misty was mentioning on then when we took the invoices for those particular items, we couldn't quite get them to agree to the cost that's on the inventory listing. Now, part of that is because a lot of times the price on the inventory listing is an average. You know, because you don't necessarily pay the same price for something every time you're buying it. So the amount on the listing is this average. I think we determined within the water department, it just hadn't been updated in a little bit, and he was going to work on updating those to be a little more accurate to current prices and things.
You had mentioned you found 2 instances in each department. How many items in the inventory did you look at? Did you look at 5 and 2 were out?
No, I want to say 25 in each fund.
I was gonna say 20, so somewhere in that.
25 maybe.
Do other communities, municipalities, that standard amount that you look at, 25?
No, it's really, we base that on looking at several factors of what's the nature of the inventory being used for in the fund, how much does it move, is it quickly moving stuff, and what are your controls in place here in those different departments to handle that? If, let's say for example, no one was really monitoring it, we had a history of lots of differences, maybe it was even so bad we had to come back and recount or something like that, we would never do just 25. We would do a much higher number. So I would say that the 25 that we did this year is a testament to the controls that you have in place in those funds that we could do.
For inventory control and.
Yes.
And
People
pricing.
monitoring.
Pricing.
Yes.
And for what we post in our financials.
Yes.
They're only testing the inventories that we're using as an asset on our financials.
Right.
Yes. That was it from a findings perspective. The subsequent pages are Misty and all of your chance to respond to last year's findings as to whether or not they've been repeated, and even have a response to this year's findings of plans for correction and things like that.
So we'll review this and respond, and then you'll give us a final draft and
Yes.
anytime?
Yes, anytime.
Anytime.
So, did I leave out did I not touch on any areas someone did want to touch on?
I have one question.
Yes.
On page 29,
Yes.
there's a statement that says the city does not have a formal minimum fund balance policy.
What's that mean?
No, I think I know what it means.
Okay.
Should we?
I have,
Well, let's start off with a clarification of what it exactly means. And then,
So this is where the fund balance that we talked about, or that equity, depending on what fund you're looking in, is, do you have any requirements that you've all established in any of those funds to say, we need to keep at a minimum X amount of dollars derived from whatever source in those funds? So I would say it's not uncommon at all to have those policies not be there unless all of you desire to do the resolution.
but in doing so, on certain projects or whatever, could bind your own hands.
And the next council could just pass
Yeah,
something.
and remove it. So we're better off to stay as, I would think we're better off to stay as we are looking.
At this time, with our understanding of our financials, as long as we always talk about it and understand it, I would agree I'm comfortable with the.
And that's a good point. If you want to real quick flip to page 7, I'll go off with your same comment there. And I know I'm cutting it short on time. On page 7, if you look down into that fund balance area, we looked at this earlier and talked about this, but I wanted to point out, you see the totals off to the left. You see the non-spendable and then our restricted and our committed and our unassigned. And so those items that come up through ordinance or resolution, those would go in the committed or an assigned area. And yes, Misty's correct, then that at whatever level they were established at, they could also be taken away at the same level. Now, those restricted monies in that area, those are called restricted because they are set that way from an outside source, whether it's a federal agency, a state agency, or maybe someone who donated monies. All of those fall into the restricted bucket. So those are all external and they stay restricted and aren't removed unless, I guess, the person who donated the monies or the appropriate agency removes them. So that's just a little bit of clarification of the items that were put there at the council level versus items put there at the external level.
That question that you have.
No, it's just, the fact that there wasn't a finding associated with the statement, it didn't feel like we were out of control.
No, it's just a requirement that if you do have a policy that we disclose it. There's not a requirement to have a policy.
And so now I'll fish a little bit. So your experience in communities our size, are we appropriate in?
Yes, I would say you are definitely in the majority by not having a minimum fund balance policy.
I would agree.
We more often see, just like what all of you did this year by committing those monies for the future road project, we see our commitments or our assignments come about from council more so than you would see a minimum fund balance
Okay,
policy.
thank you. That's helpful. Appreciate it.
Yes.
You feel like it could be all.
No worries.
Now, my plan for the full meeting was I generally, if it works for all of you, do very high level, very brief, concise discussion of the audit. I don't walk through any of the variances or anything like that. If that high level works for all of you, otherwise I can tailor it.
No, I think that works. And it will be, it'll be a little bit, we've got some business to take
Yes,
care
I
of, getting
understand.
new members on board and so forth.
I
So
understand, no problem.
I'm just glad to be honestly, I'll put it out there. When I was on once before, it had been many, many years since we had it on. So I'm glad to see that somebody has picked it up. So kudos to the council, prior council, we being here.
and kudos to our finance office.
Yes,
for,
And it's the
don't
law,
make
so.
it-
We're just complying
It
with
is
the
the
law.
law, but we
Yep.
would make that statement, that argument, and that's all we got.
And Shelley, we do thank you
Yes,
for
thank you.
your
Yes.
Thanks for having me.
thorough look. And,
Yes, and I appreciate your questions, and if you come up with more later on, Misty has my contact information, feel free to get in touch.
Thank you.
Yes.
Thanks.